Today, we're going to discuss reasons why we think that the Bank of Canada will be lowering its rates soon. The steady flow of rate increases starting in early 2022, designed to combat inflation, has been really difficult for us, and it's made it more difficult to buy or finance homes. There's growing anticipation that the Bank of Canada might soon lower its interest rates, a decision that could have significant implications for homeowners and potential buyers alike. First, let's touch upon a recent development in the United States. On December 13th, 2023, the US Federal Reserve, that's their version of the Bank of Canada, decided to hold its interest rate steady. This decision is particularly important for us here in Canada, as the monetary policy that happens in the United States often influences our own economic strategies. For instance, a higher interest rate in the United States compared to what's available in Canada will lead to a weaker Canadian dollar. And this impacts our ability to afford imports, which are imported in US dollars, and it impacts the overall market stability because that causes inflation. It also impacts their bond yields, which in turn impact our bond yields. And all of this impacts the mortgage rate pricing. Now, shifting focus back here to Canada, there has been significant discussion about Canada's current economic challenges. We know that economic growth has stalled, and noted economist David Rosenberg, he's highlighted recently what he terms to be a debt crisis in Canadian households. This crisis stems from a high debt-to-income ratio, which currently exceeds 170%. And this level of indebtedness here in Canada, coupled with the existing high interest rates, paints a picture of financial strain for many Canadian families. And these factors are particularly relevant to the mortgage industry because the high debt burden in combination with the current higher interest rates makes it challenging for many to become homeowners, or for many existing homeowners to manage their mortgage payments after a mortgage renewal at now a much higher rate. Experts, including Rosenberg, believe that the Bank of Canada will need to lower its interest rate to provide some interest relief or payment relief. If it doesn't do that, the wave of upcoming renewals will strip far too much money from our economy and redirect that into mortgage payments on existing homes. And that doesn't help the economy. So lowering the rate will not only lead to more manageable mortgage payments, it also can support the housing market, which has been sluggish outside of Alberta. Now, looking forward into the future, there's speculation that the Bank of Canada will begin reducing interest rates around April of 2024, so in about 5 or 6 months. For those in the mortgage industry and homeowners alike, this potential rate decrease is a crucial factor to consider, and it has the potential to influence the housing market significantly, affecting everything, of course, from mortgage affordability to housing demand. So in conclusion, the anticipated downward movement in interest rates by the Bank of Canada, as well as the already decreasing bond market, those are things to pay close attention to, as it will substantially impact the mortgage strategies and financial planning for many. So thanks for joining me today. And for those of you looking for more in-depth insights, especially regarding how these changes may impact your home or your mortgage plans, be sure to read the full article. It's linked to below on the YouTube video here, or it's below it if you're watching this right on our blog. Please like and subscribe for more videos like this, and I'll keep you updated.